Thank you so much for joining us, Anthony. We are very excited about this opportunity for this series of interviews, learning from the leaders of the industry about how they manage risk, how they manage the job day-to-day basis, but also the challenges that they face all around the globe. But we may have some similarities, but definitely it's important to understand the environment, the business mindset to get the better approach and the better solutions. And considering your role, I think that that's very important for us to have you as the first participant in this initiative.
Been with BAT for over 26 years in various roles. For probably the last 7 or 8 years, I've been effectively the regional head of tax of Latin America, looking after markets from Mexico down to Argentina and Chile, as well as Canada. When I say looking after markets, I have a corporate tax responsibility. So it is my role to make sure that the markets are applying the group tax strategy, are applying all of our tax guidelines, ways of working, and also to make sure that the group their tax numbers that flow into the group financial statements are as expected, because we very much proactively manage our group effective tax rate. So I have delegation to manage the regional effective tax rate.
And I really appreciate the time from Mark Taylor. He's our global tax leader. He's involved not only in my region, but in the whole globe. So he has significant experience dealing with different challenges all over the different industries. So thank you so much for joining us as well, Mark.
Thank you. Thank you, Jose, and thank you, Anthony. It's a pleasure to be with you both today. Yeah, so Anthony, as Jose has said, we're really interested to hear, particularly, how you choose advisors, how you manage advisors, what you look for in professional advice. And so may I ask, are you managing multiple advisors, or do you more tend to look for a firm who can manage different countries for you?
I think the answer to that question is it is horses for courses. So I manage different advisors. I manage the big four. I manage legal advisors. It really depends on what the issue that requires the management is all about. We literally would take the most suitable advisor for the territory. And by that would obviously mean if we were new in a territory or hadn't experienced a particular dispute before, we would look to our main pool of advisors, who would typically be the big four, mainly Ernst & Young or Deloitte at the moment. And we have very importantly, and increasingly importantly, we have global leads. So very often for a piece of work, I would go to a single point of contact and say, who is the best person to speak to in your team in Mexico, as an example. And he would put me in touch. He would do some filtering, or she would do some filtering already to find out who the person who's our sort of liaison partner in that territory would be. And then we would get together. It would then be a sort of an experience, a feel as to which we would probably look at both the partners and both the firms. In addition, our local business may well have met some experience with some local lawyers, some local legal firms. So we would always take them into account as well. So there is no defined single firm that we would use for a particular piece of work. It would be getting a feel for who's got the most experience in this piece of work, who's obtained some good results, has real world experience, rather than sort of more hypothetical views on how they can reach a solution. So it really is picking and choosing the best advisor for the piece of work. We have been known in the past to delve into the likes of Chambers guides, in particular if there was no specific standout advisor, and it may be a new territory where we don't have the experience. We tend to have tax managers in most of our biggest markets, so we would look to use their skills and also their knowledge of the advisory market. In addition, where we don't have a tax manager, then in that situation it would be more of the sort of the latter situation where we would be running blind, if you like, and having to a lot of detailed work ourselves. So, for example, across Central America would be a good example in Nicaragua or Dominican Republic, where we don't have tax managers. If a dispute were to come up there, we would be looking at who ranks the top and near the top for that particular territory in that particular field of work.
Thank you. And yeah, totally understandable. And does that go for compliance work and advisory? I mean, is most of your compliance done in-house, or do you outsource or co-source things like that?
We've recently engaged Deloitte to become a global corporate tax outsourcing partner, and that typically is for very much pure compliance, filing of tax returns, making of tax payments, withholding tax returns and withholding tax payments. That would be it. Where we fully prepare the returns, review the returns in-house, then we would not be using the outsourcing partner. That is purely for markets where we don't have the capabilities ourselves, or one part of that compliance process is outsourced. So where that one piece is outsourced, we're bringing that in with our global outsourcing partner. That said, if there is a piece of work that is not related to compliance, transfer pricing review, for example, then we're not restricted as to who we can use. So we would then be going into the market looking for the most appropriate support for that piece of work. So the compliance is just the compliance. It's relatively recently been implemented, so we're yet to see the fruits of it. Some of the coordination, some of the dashboards in terms of interesting where we're leaking tax, where we've got a lot of disallowables. We're yet to get that sort of information on an aggregated basis, so yet to see the fruits of it. But that is for compliance. In terms of indirect tax, we are looking at putting in place a separate outsourcing arrangement with another party. So we certainly BAT prefers to manage different tax types across different advisors and taking the best that each has to offer.
In terms of the dashboard that you mentioned, is that something that you've developed in-house, or is that something that your advisors provide you with?
That is something that the advisors provide. It's part of their standard toolkit, standard engine. I think that a lot of the discussions that we were having were not so much around the compliance and the routine and the process of making it more efficient and some cost savings, but it was really some of the global insights we would hopefully begin to be able to see from having a single outsourcing partner. I said unfortunately it's just too early. If you come back in 2 or 3 years, I'll hopefully be able to give you some of the learnings and some of what we're seeing. But it's been in place. The arrangement's been in place for less than 6 months, and so we haven't even submitted our first sets of tax returns yet. But I think there is a plan for those markets where the outsourcing is not being undertaken by the provider, that they would have access to this platform, to be able to input their data as well, so that we can start to get a global view, and it's not just a few markets here and there where we've got the information, but we've got it completed across the group.
The turmoil with tariffs and tie that in with transfer pricing advice, because for our clients in the middle market, they're wanting us to tie those things in for them in terms of supply chain management and advisory, and perhaps supply chains are changing because of different economies, different tariffs, etc. Have you had to change how you manage those types of things?
Typically when I first joined BAT, we would probably have a factory in almost every territory in which we operated. Clearly, increase of centralization, globalization of our manufacturing and supply chain organization has meant that we've looked to build bigger, more strategic factories, typically serviced in trade blocks. So being able to provide product to a wide range of market in as efficient manner as possible. In terms of looking at tariffs, etc., we have a sort of indirect tax manager, so it's not something I've specifically been involved in. And I would have to probably say that we are a little disaggregated between our supply chain activities from an indirect tax, tariffs, etc. perspective, and our transfer pricing, albeit that the transfer pricing model dictates everything. So, for example, if you had an above market principles company, then obviously the price that entity would be selling into a particular territory would be high. Now, obviously, if that territory were to have ad valorem duties, then that's something that would have been addressed as part of the design phase when we were looking at the structure in that territory. I think some of it's relatively straightforward. Probably the business models tend to dictate the transfer pricing. The commercial activities that are undertaken on the ground replicates the transfer pricing. They dictate the transfer pricing, the level of experience, the sort of the DEMPI functionality of our people on the ground in particular territories dictates the transfer pricing. And then typically the supply chain piece, the duties, the tariffs, etc., would support. So they wouldn't necessarily drive. But that said, when we've been looking at designing business models, changing business models because of changes in the commercial organization, then obviously there are things that work and there are things that don't work. We have challenges around customs duties, specifically mainly around getting things right, where there may not be tax at stake for the tax authority, but if you were to make a mistake, then the punishment of penalties is and interest on those penalties is extremely high. And the fact that you're dealing with very high CIF values of product means that any mistakes that you make, you get penalized hugely. So it's fundamentally important to make sure that you've got a customs duty process, making sure that forms and generally the compliance itself of managing imports is managed properly with a lot of accountability. Because we have seen examples where even though, as I said, there's no tax loss for the government, the fact that you've miscategorized something for whatever reason can lead to the big penalties, and it's those that we tend to get involved in, specifically also around disputes. I mean, there is obviously an interesting point around WTO practice of whether to include customs royalties within the dutiable value, and some that's seems to be been around for a while, but tax authorities seem to be taking somewhat different positions on that for some of our territories. So even though it wouldn't necessarily affect the amount of tax, because any import VAT you pay, you would generally receive as an import VAT credit when you actually come to sell the goods. If you have the wrong dutiable value, then often you can get penalized on a very, very high base. So it's fundamental to get these things right, and also take some positions that tend to mitigate risk. We have our own, as I said, our own in-house transfer pricing team. So we have, I'd like to say, sort of best-in-class documentation. That said, what's produced for one territory and globally doesn't always resonate with either tax authorities or even tax advisors in another territory, and particularly around things like benchmarking studies, whether you're using global data sets or regional or local data sets. And I'm often surprised by the amount of work that tax authorities do behind the scenes to come up with their own comparables, often for not publicly available data. So whilst there are significant advantages of having documentation in place, it's not the be all and end all, especially where there are tax authorities who are quite clued up on transfer pricing and then have a different view as to what comparables should be put in. What constitutes a comparable company can be very different from a global perspective for what we believe would constitute a data set to what they would believe constitutes a data set.
It's helpful that so many countries around the world have adopted the OECD's guidelines on transfer pricing, but of course not all countries have adopted those guidelines. So even methodologies can vary, as well as the data sources, as you say. And talking about the OECD, I'm guessing that Pillar 2 must be quite high on your list of problematic areas.
Yes.
Given the phased implementation, we're helping more and more clients with Pillar 2. They might have a headquarters in Dubai, which hasn't yet implemented, but they've got to report in the UK for a subsidiary.
Yes.
So how does that work in terms of the segregation between in-house and advisors, Anthony, in terms of Pillar 2 and information returns, etc.?
So we were very early to the party on Pillar 2, realizing it was an industry in itself. We designed our own spreadsheets and managed to integrate them into our global reporting systems, which means that the information is automatically downloaded. That took an unbelievable amount of effort, produces a fantastic result, but is not without blood, sweat, and tears to get to that position. You're absolutely right. I mean, depending on where your ultimate parent entity is based, you can easily have a period where it's relevant for that territory, but not for an underlying territory. And it seems very odd that you would pay additional top-up tax in a territory outside of the territory to which the Pillar 2 rules apply for that year. So it's something that obviously I suspect will come into focus, certainly once more territories or most territories starting to adopt the rules. That differential should disappear somewhat. But obviously you've got transitional safe harbor rules, whether the local rules meet the OECD standards and the sort of the rules of various other territories of your ultimate parent entity, whether they align. And so that mismatch is difficult. In particular, you find that where you have businesses and territories which aggregate activities, sometimes that is some surprising results where you have sort of a lot of losses, a lot of investments, and then you have within that same territory, you have income that may be subject to some sort of R&D credit, for example. So you get benefit for developing roles, for developing technology in a territory. And then because you're also got a range of other activities which may be loss making in their infancy, you have a credit at a higher standard rate, you end up with a very low ETR in some territories. And added to that, then the complexity of deferred tax. It makes it all it is an industry. We have had to employ a number of individuals to keep close eye on this. It's new, I think, as well, which is obviously goes without saying, but we have some very experienced tax managers around the group, and they find sometimes the compliance of completing our Pillar 2 returns unbelievably tricky. You've got to some of the most. I'm talking about some of the most experienced tax managers, senior tax managers, trying to get them to wade their way through Pillar 2 workbooks is not straightforward. So it's a world we're in. We have chosen an advisor of choice to be our global partner with developing our our systems approaches. Again, we've got some dashboards as well, primarily to track the compliance obligations as well as any payments that may arise. But I think, I have to say, I think the advisors are learning probably from their clients as much as the clients are learning from the advisors. And I think that at BAT, we've been very early to the process. We had a whole bunch of questions a couple of years ago that nobody knew the answers to. So trying to develop our own toolkit has been incredibly difficult. It's a new world. It's a once in a generation or multi-generation tax that no one's ready for. And I think it's going to be tricky.
Something that we were always being asked by clients or by companies that would like to invest in the region compared with other geographies and coming from an economy like the UK. So we have a lot of political changes, right? And we have significant reforms. I always say that we have two favorite sports in Latin America, football and tax audits, right? And that's exactly your line of business.
Tax reform as well.
Yeah, exactly. Tax reforms and tax audits, tax reforms, and football. So if we think about that and all the changes that we are suffering at the moment and compare with other jurisdictions, why is it still attractive for a company like yours to keep investing and expanding into the region? That's something that you consider in the equation, the risk that you are bearing to invest. How is handled considering your role?
Yeah, I mean, I think across Latin America, as I mentioned, we've been there for a long period of time. These are very large activity pools, economic pools, full of outstanding people. They're in many territories, the education system is very good. They're fantastic universities. So talent pool wise, we find Latin America to be a very rich talent pool for the business as a whole, not necessarily tax per se, but across the whole. So we certainly find that we want to be investing in Latin American territories. They said that they have good profit potential. Often we find the sort of the agricultural side. We have a very big leaf growing business in Brazil. So climate wise, often there's a good reason to be there from an agricultural perspective, growing the crops, etc. That's Brazil is a strategic leaf, and additionally there are some attractive trade blocks. The Andean Pact, you can manufacture in Chile and sell across Latin America. So obviously we've got Mexican factories servicing Canada, potentially the US as well. So I think there are clearly some games that go on in territories, and tax audits are not always straightforward. Tax reform can be even less straightforward, and we find tax reforms being underway in Chile and I think Colombia. We've been struggling with tax reform that's failed, and they've got some very dire economic tax policies because the economy is struggling. Brazil's probably one of the other main ones where tax reform and in particular around indirect tax, it is so complicated, indirect tax in Brazil, that we have nearly 100 or so people managing in our indirect tax compliance. So it's a necessary evil to as part of being in those markets, developing those businesses, dealing with difficult tax environments is part of the business.
And coming back to your role, Anthony, because I think that is very interesting to take advantage of your experience. So when you are dealing with audits in the region, how in general, of course, you can have, as you said, situations in certain countries, but when you think about negotiation process, settlements, try to have a resolution that is fair, of course. And what is your experience overall in terms of timing, in terms of ease of trying to close it in a proper way and to avoid any additional risk? This management, how you do it?
Yeah, we have policies, we've got processes, we've got a lot of governance around settlements and closing down tax audits. So there is no way that anybody locally can conclude a tax audit without having to go pretty much to the CFO for approval. And it's not just about the amount, it's the process that they've adopted, it's the how, and making sure that there is complete transparency with everything that's been shared with the tax authority. So we certainly do look to settle disputes. Taking an item to litigation is I wouldn't say necessarily a last resort, because I think we typically find with the way that we're organized is that we're very happy to take matters to litigation where we think that the facts and the legal basis is behind us, but we're not afraid to go to litigation. That said, there's a point in time where the number is so big that you're defending. It may be hugely overinflated, that we find in some territories. You get not quite spurious tax demands, but you get very, very high disproportionate tax demands. So often good discussion, collaboration between the centre and the end markets and the end market tax managers and the advisors often enables enhanced settlements to be reached. Because I think if you're trying to leave a junior, inexperienced tax manager to negotiate on their own with a tax authority, you're asking for trouble. So you clearly define the strategy, what the boundaries are, where your strengths and weaknesses are, and what numbers you're prepared to settle. And yes, in many instances, we've had some good results.
Most important economies has a double tax treaty with the UK. So
Sure.
in this resolution process, is that something that you use frequently? Is this something that you take into consideration?
Yeah, absolutely. I spend a lot of time looking at double tax treaties, looking at what's available under them, whether there is arbitration, binding arbitration, or best endeavors, and what the approach is of the tax. And also the OECD have been publishing some very interesting outcome results over the last few months.
Yeah.
And that's really interesting. And I think there are a lot of tax authorities who are significantly improving the speed, and B, the resolutions of double tax disputes, because I think in the past that there would be many who would actually just refuse to admit something to MAP, whereas we're finding a lot more transparency from the tax authorities due to this publishing by the OECD of this data. So it's really welcome. We without a shadow of a doubt, if we would typically, if there is a dispute, and most of our disputes these days would be around transfer pricing for obvious reasons. If there is a double tax agreement in place, and double tax treaty in place between the two parties, that would be why wouldn't we use that? And we take that to settlement, and sometimes that can play a strategic role where tax authorities may not want to go to MAP for whatever reason. But that said, if there's an issue between two territories and there is double taxation and there's arbitration, then automatically we would typically, it almost bypasses settlement, because some of the positions are extreme by tax authorities. So therefore, if you can get a good result under MAP, then we would typically look to accelerate that process. Fully recognizing it can well be a 2 to 3 year journey and a 2 to 3 year wait for the two parties. We also find that we proactively engage with both competent authorities. So we don't just file a claim. We make sure that we are available for any queries they have, happy to meet and discuss, present to competent authorities, obviously sharing with the other side, just so that I think for often under MAP, you have an imbalance in that the tax authority where the dispute has arisen have a huge advantage, especially where you've got a dispute going back a long time. They've got all of the history, all of the facts, whereas the other competent authority is really scrambling around from day one to begin to get up to speed. So the more you can do enabling that process, the better outcome under MAP the taxpayer is likely to get.
Yeah. As you noted about the inventory and of certain countries that are so much better in terms of resolutions on maps. And it's not the same type of discussion if you go to Mexico than you go to Brazil or you go to Chile, and the level of experience of the tax authorities internationally is not the same. And they are perhaps not used to go for a map process or an APA, even if it not only is bilateral, but multilateral, right? That you could be more used to. And then you have to deal country per country instead going regionally. That could be even better, because at the end it's the same discussion, isn't it?
Yeah, no, that's absolutely right. I pity tax authorities, and I don't say that loosely. I do pity tax authorities. The sheer volume of maps that are coming down that are coming down the pipeline to them, I think is potentially unsustainable. And so I think in terms of the management of by tax authorities of their competent authority teams, I think there's going to have to be a lot more resource put into competent authorities, because otherwise you'll find maps taking a lot longer to resolve, because I think taxpayers are, they really do see them as a good avenue for dispute resolution. And we are in a bit of a sweet spot where you've got the gleam of light shone by the OECD, coupled with a desire to improve their ratings, and probably a relatively low number of maps in progress. I say relatively, there's obviously still a large number, but I think as those start to grow, and if tax authorities looking to raise income, difficult times, as we all know, for the tax authorities around the world, wanting to increase their tax take, it's just going to lead to more and more disputes, more and more map cases. And I am concerned by the ability of the tax authorities to manage those.
I think that artificial intelligence and tax technology, how much are you using it? And the tax authorities are increasing their benefits and the use of these tools to audit it more effectively, more strategically, and do better analysis to understand better the business. And systematically, I think that they are using it in a way that will strengthen their chances, only because of the data that they get, to have better opportunities in an audit process or in the discussions that we just mentioned, right?
I think the risk with that is, you're absolutely right. AI is a useful tool for tax authorities. It is a tool that we are seeing being used, we'd say, inappropriately. So in terms of what I was talking about in comparables, benchmarking studies, data sets, it's being used to effectively to create a dispute where one may not necessarily have existed. If they have got a different data set, a different geographical remit, then ultimately they can produce whatever data set they want. And yeah, I'm not sure that's a particularly positive position for, active collaboration between taxpayers and tax authorities, where tax authorities are using AI to deliberately trap taxpayers.
And have you noticed any difference in your interactions with advisors, which is due to their own use of AI?
I think in terms of tools to enhance compliance processes, yes, there's a lot of things we've been looking at with advisors to make sure that, certainly on indirect sides, that we're maximizing our input VAT credits. Often, there would be coding issues where potentially some piece of input VAT was not being coded correctly, and therefore we weren't claiming the credit. So there are a lot of tools out there can summarize, analyze huge amounts of data very quickly, and enable you to file some claims to recover some input VAT. I think with all the will in the world, my concern with AI and technology is all about data, and it's all about accurate data and getting data correct at the point of entry. And I fear that that's something that's not being addressed. There is a gap around data input, because if you have rubbish data in, all of the AI tools in the world are not going to give you any insight into what you should or shouldn't be doing. So that is my major bugbear with AI and data, and it's something that is I think I've not come across anybody that's managed to resolve it cheaply without huge, without setting up data input centers, because ultimately categorizing invoices, coding invoices, descriptions on invoices need to be done far better, and not at BAT, but just, I think, across industry as a whole. So I think there is a bit of a gap around everybody. I think there is a rush to the sexy stuff, but without the quality of data coming in, everybody's wasting their time, I think, is my view at this stage. But if you've got the quality in, then I have no doubt that there's a lot of good stuff out there that can really drive behavioural change. And yeah, we're well underway in the journey.
And we're seeing various governments around the world really ramping up their technology capability. Lots of countries bringing in e-invoicing. I'm aware that Saudi Arabia, for example, have recruited so many IT specialists. Your invoice now goes to the government before it goes out to your customer. And if there's something in there that flags up, it can be delayed while they ask you about it. Is this something that's happening in LATAM region at the moment, and it's something that you're having to another thing that you're having to adapt to, Anthony?
Yeah, I'm not. It's more on the indirect tax side, which I'm not directly involved in, but I know that our guys have been doing a lot of work in Mexico a number of years ago. A huge project around sort of e-invoicing, making sort of tax digital. But yeah, without a shadow of a doubt, it's all you got to do is you probably go to any territory in any country, and there will be, like you see in the UK, adverts on telly about everybody's struggling with making tax digital. It's a big industry. It's a big gap. It's a huge amount of work within the timelines, because whatever runway the tax authority will introduce digitalization, it's never enough, and people don't begin to address it early enough. So that's probably certainly a key learning. I mean, in terms of, I guess we're yet to see tax authorities parking themselves interrogating our data from a corporate tax audit perspective. That they may well do it, but it's not something that's typically particularly visible from my experience. It's still very much the old-fashioned way of submitting. Yes, you submit electronic returns and tax computations, but then it's very much the tax authority, whilst they are fully entitled to plug themselves into your systems and interrogate the data, I think there is probably a slight lack of capability at this stage, which I have no doubt will be addressed, and there'll be some interesting learnings, there'll be some challenges, but I think on the positive front, to meet the challenge of that, it means that the taxpayer is going to have to address the things that that maybe they've been putting off for a while. So I think, in a way, it's probably a good thing, and it would certainly force, not so much BAT, but for other industries, it would certainly force them to get to know their data, get to know their process is much better. The ability of the tax authorities to interrogate data, put in keywords into various fields, and drum up a list of what they believe are non-deductible items and then it's up to you to defend it. And it's very easy for tax authorities to inundate taxpayers with information requests that take a long time. So I think the more that you can sort of self-certify that you are sort of best in class, and obviously SAO in the UK we address some of that with the senior accounting officer rules. I think it's something that taxpayers are going to increasingly have to spend more time, more money on going forward. coupled with pillar 2 as well. It's, where do you, being a head of tax is not an easy, it's not an easy role.
I think, Anthony, that could be your recommendation, your suggestion, if you can self-reflect about dealing with the region. If you are in front of a lot of head of taxes that must have your role and deal with all these disputes, controversy, audits, reforms into the region, what could be your suggestions to them, broadly speaking?
I would say the biggest benefit I've received over the last 10 years or so is the creation of a line organization, so that there is centralization in managing disputes. I think you need dedicated people who have access to the tools to be able to get the best outcomes is paramount importance. Because I think, as I touched on before, if you've got a young tax manager, inexperienced, trying to just fend off an aggressive tax authority by themselves with little support from the finance community, they need information, they really do need support. Just in terms of strategic approach as well, I think having a central body, central people who know what they're talking about, who also often can speak to a global point of contact to be able to approach the local advisors, and also they can assist with laying down the law to the local advisors as to what they should and shouldn't be saying, because often you can find there is a risk that local advisors can be more interested in extending a dispute to maximize fee generation than sometimes resolving one in the best interests of the client. So I think having centralization, for me, having oversight of it when disputes first arrive, being able to speak to a central contact, and then having a meeting with everybody involved and everybody concerned, I think is a really good approach. I think the one thing also one fails to underestimate is the human cost. It's really tough mentally for a tax manager to deal with an aggressive tax authority. You never think about it. One never stops to reflect on that. It's really mentally challenging and draining, and they need to be. You need to support them.
Agree.
You really do. We've had cases in the past where things have not gone maybe quite as well, and tax authorities came in and did a lot of interviews, and those interviews were poorly managed. It's really tough. You need coordination. It's there is no doubt that tax authorities are increasingly sophisticated, developed, coordinated. They've got support, resource. And as a taxpayer, you need to do whatever you can do to level up that playing field, and that's what we try and do.
Yeah, well, very insightful, very interesting. Thank you for that. Thanks for sharing your thoughts on that. Anything else that you would like to share with us as advisors, or with clients, with targets?
No, I think the only thing is if you have a good advisor, it's like having part of the family with you. Just makes everybody's life easier and really adds. It is like being in an extended family. So I would never overlook the importance of getting the right advisor.
Yeah,
and as I touched on it to begin with, that can be anybody from any firm.
Agree. Totally agree. How important is the human connection, the personal connection, and the trust. The trust to create long-term relationships, business relationships, and productive to getting the results that you like to achieve. Anthony, thank you so much for your time. It has been a pleasure to have you in our first session.